If you don't understand market structure, I guarantee you will not be profitable. So in this video, I'm going to break down in 3 simple steps how the real structure is different to the way a lot of other people are teaching it. Before we get started, we just passed a $200,000 challenge for a client in just 15 minutes. In just 15 minutes, this client was funded 6 figures. So now he can go trade live on that account and make real profits. People take weeks and even months trading these funded challenges themselves, only to fail in the last stage. So if you want to avoid this waste of time and money, use our automated trading bot to pass the challenge for you, 100% guaranteed. If you fail the challenge, you get all your money back that you paid us guaranteed. However, that's never happened. You will be funded. That's 100% guaranteed. Also, after we get you on the live funded stage, you get free 1 month access to the signals room to learn how to take trades on the live funded account. And the signals room by itself has been reduced from $100 a month to just $30 a month because I want to make it as affordable as possible, and I don't know how long the offer will be available. So join now for the most affordable price of just $30 a month. The link to this will be in the description below. And if you want to get funded guaranteed and pass your funded challenge guaranteed with us and get free 1 month access to the signals room to learn how to take the trades on the live funded account, we've got loads of proof, loads of testimonials here. The link will be in the description below. So take action now before you miss out. So the first thing I want to show you is why candle closures and wicks above or below structure are not enough to take a setup. So as you can see over here, price broke this structure with a wick. Okay, so the wick moved above price. So let's say you're taking the trade in that direction. Okay, so you mark out the range and you're looking for confluences or reasons to take the trade in a discount of this whole range, right? And yes, it works over here. Price moves in your favor. Now, the candle closes above this time, above structure, making the trade high probability. And let's say you were to mark this range out. As you can see, you look for the order blocks and discount arrays. As you can see, you have all the confluences in this area. However, the trade still doesn't play out. Again, this is not consistent enough. It worked once over here. However, it didn't work in the second example. You can see price closed above this structural point with a body with this candle over here. So let's say you were to take the trade based off that candle closure above structure and you were to mark out your range. As you can see, price taps into the discount, taps into a discount array, and price ends up moving in your favor. Again, price breaks structure with the bodies above this point right now, above this structural point. You mark out the range, and as you can see, price takes the low and stops you out, even though there are discount arrays in this range, right? And price still stops you out. Now, let's say you were to take the trade in the opposite direction, follow it along with this wick closure now, and you were to take the trade based off this range. As you can see, price comes very close to stopping you out. It comes very deep into the premium and almost stops you out. So as you saw from live price action, this was not enough to take a setup. And again, over here, this is another example. So let's say you have a premium array, for example, an order block or fair value gap over here, and you are still just taking trades based off candle closures and wicks above or below structure. So as you can see, let's say candles close above the structural point and you were to look for buys, just based off your structural understanding and your technique of looking for trades, price will end up stopping you out. Why? Because price just hit a premium array. However, price instantly reverses back to the upside. However, what do you do now? Because you saw another break. Okay, let's say this is a wick, for example, over here. Now you saw a wick below the structural point. So now you take the trade in the opposite direction. So let's say you mark out this wick break of structure now, and you're looking for trades in your in this downwards direction. However, what price will do is it'll stop you out again, and now price takes this structural point again with a body closure, and it violates this premium array. So now you're thinking price is bullish. Okay, so now what happens? Price makes another retrace. Okay, back into discount area. Okay, price makes, let's say, equal high, lower high, can make whatever, and then price moves below. And this brings me on to my next topic. So when we're looking at institutional structure versus basic structure, we have to link the two together. Why would candle closures and wicks above or below structure be less consistent, and what would make sense with institutional structure? So as you can see over here, let's say price wicks this structural point over here. Institutions would see this, or institutional traders, smart money traders would see this as a liquidity sweep. Okay. However, the basic structural traders using the candle closures and wicks would see this as another opportunity to go long. And what ends up happening is price ends up stopping them out, right? And a lot of traders, a lot of people get this wrong. However, the real way to look at the structure is to make sense of it. You got to look at the narrative overall. And another really major help for looking at the narrative and institutional structure is my daily bias video. So if you haven't watched that, the link to that will be in the description below. It's my previous video, and it's very essential to understanding a trade and framing a high probability trade setup. So over here, you can see an institutional structural move. Why is this an institutional structural move? Because as you can see, price broke structure heavily And the key word here is displacement. We want to see price move with displacement. It can't just be a break like this, because as you can see, this was not with displacement. As you can see, this one fully closed below. This was an energetic move down. If you saw price doing a break of structure like this, or if you saw a price doing a break of structure like this, which one would you believe in more? Which one would you say has a higher probability break of structure? Of course, the one with the more energetic move. And this is the difference between institutional structure and just basic structure shifts, and the real valid market structure shifts, okay? So as you can see over here, what can we expect now after these traders here have been shaken out of the market? So because we now know that this break of structure is an institutional move, and we know that the big players have entered the market because there's a big move, an energetic move to the downside, we can then take trades in confluence with the direction. So as you can see, we get a retrace up, we mark out our range with our premium and discount after all of these traders over here that have been entering and have been stopped out with the basic structure knowledge have been shaken out of the market over here. Then we enter after the shakeout, okay? We enter after previous liquidity has been taken. And if you're familiar with this channel, I'm very big on entering after liquidity has taken, okay? So all we look for is that same confluence in our premium area to look for the trade to go down. And as you can see, this trade will play out. Why is it high probability? Because we know institutions are involved in this move. So to summarize this, basic structure includes wicks and body closures only. You're not looking for the narrative, you're just strictly trading based off candle closures above structure or wicks above or below structure, which is the wrong way to go about looking at market structure. The real institutional structure includes displacement, and a really major key, a major rule for trading institutional structure is no displacement equals no entry. When there's no displacement, usually the market just reverses straight away. And although yes, with the wicks you might get more setups, they will be less consistent. And with this, you will have higher probability setups, you will have higher probability trades, and overall you'll become a better trader. So let's look at some examples of institutional and real market maker moves. So as you can see, we have a structural point right here, and price breaks the structure with displacement. Look at the energy on this move right here. Lots of candles closing below. So all we do is mark out our range from high to low. We've got the discount here, we've got the premium. Remember, we're going to be selling at premium levels. And if you haven't watched my daily bias video already, go watch that, because it explains everything in detail and it's essential for marking out market structure, okay? You need this, you need the overall narrative, and I'll explain that in the next point. So as you can see, we mark out our premium arrays over here, and all that happens is price retraces into this area and simply drops. And this trade works out because we had our narrative and we had our displacement present in the setup. Again, here you can see price broke structure with displacement. Look at the energy on this move. Look at how many candles stayed above the structural point. And all that we do is mark out our range because displacement was present, and we look for buys in our discount area. So we look for discount rates. As you can see, we've got a clean order block right here. Price taps into this area. You can wait for lower time frame confirmations, or you can just look for the trades up here. However you want to take the setup. We've got so many strategy videos for different entry confirmations, and as you can see, this trade actually works out. And even after price break structure, okay, break structure with displacement again right here, and although we didn't get a full retracement into the deeper discount, you can see price did overall have the uptrend bias. We had our bias correct because our market structure was correct. It broke structure with displacement, so our bias was correct overall of it being bullish due to this one market structure shift with displacement. Now we're going to look at the narrative and how to mark out real structure. So you know what institutionally sponsored moves look like. We want to look at the daily bias, and this is an absolute cheat code for marking out the market structure correctly. Essentially what we want to look for is what would make sense. If a big move is present, institutions are present. Displacement is key, and I keep saying this over and over again, and I'm going to keep saying it because it's very important that you guys understand this. So let's look at this example over here, and I'm going to show you one more live chart example. So let's say price is it doesn't have to be trending. Let's say price is consolidating over here, right? We're still marking out market structure. So let's say for this example, price wicked above the structural point. Remember, all the basic structural traders, the people that are just taking textbook market structure setups, right? The wrong textbook market structure setups, what they would do is mark out the premium range of this area, okay, this break of structure. And what'll end up happening is they'll end up being stopped out looking for trades in the wrong direction over here, okay? So they've got stopped out once over here. Now they look for trades in the opposite direction because they want to enter again. They want to look for another break of structure. So let's say price closes below with a body this time. So this is a high probability setup for them. They'll take the trades again right here, and they'll end up being stopped out somewhere in this premium array. Even if they're looking for order blocks, if they're trading off order blocks, fair value gaps, they'll still be stopped out. So that's why a lot of smart money traders, they're supposed to be trading with the banks. However, they are being the liquidity for the banks, which you don't want, okay? So now, what would make sense in this area right here? Institutionally, from an institutional standpoint, you would see this as a liquidity sweep, especially if it's a wick. There's no displacement here. There's not even a candle closure above. It's a wick. So this is most likely a liquidity grab. Then price moves to the downside and again sweeps this liquidity, all these sell side lows resting below here. The sell stops resting below these lows. Price sweeps it, but price closes below with a body. Is this displacement? Is this a big move where institutions are present in scaling into trades over here and taking trades further down? No, because there's no displacement. Although there was a body closure and a candle closure below the structural point, there was no displacement. However, we wait, we're patient, we're not taking inconsistent setups. As you can see, the retail traders and the basic structural traders will be stopped out over here. However, if we wait for the right structure to be made and to be taken, as you can see, price closes above with displacement. Would it make more sense for banks to enter in this area over here where displacement wasn't present, or this area over here where lots of displacement and lots of energy was put into this move over here, okay? And all we want to do is mark out our premium discount arrays. In this case, we would look for discount arrays such as order blocks, fair value gaps, etc. And you could even look for lower time frame confirmations in this area with the strategies that I've taught on the YouTube. However you want to enter, however we want to catch the move. So let's say we look for buys over here. So we're taking less setups, however we're taking higher probability setups. So what ends up happening is price ends up taking profit and smashing our take profit and going in our direction. So now an area where a lot of people will be confused is here. A lot of people would say, okay, price closed above the structural point with displacement. However, the trade did not work out, and I agree. Yes, price did close above with displacement. However, what were you missing? The daily bias. You were missing the original narrative, and I explained this in my last video. What you want to do is go to the daily chart and just look left. The first thing I mentioned is to look for the previous liquidity sweeps or opposing liquidity, okay? Now, after price swept liquidity from this old high with buy stops resting above it right here, did price tap into a premium array, order block, fair value gap, that sort of thing? So as you can see, price swept the liquidity and tapped into this fair value gap, the consequent encroachment of this fair value gap. And another confluence for this fair value gap being a high probability fair value gap, there was a balanced price range. There was a fair value gap within this fair value gap. So as you can see, price swept that liquidity on the daily. So I'm going to keep that line on the chart so you can see why that was a liquidity sweep. Now, price broke structure with displacement, yes. However, price has just swept liquidity and tapped into a bearish premium array on the daily chart, okay? So now what takes priority, the 4-hour structure or the daily time frame, the daily bias? The daily is now bearish from this point. So from now on, from here, from this point onwards, you should not be looking for buys based off this break of structure, which is why this displacement did not work, this displacement break of structure, and which is why a lot of people would have been mistaken, a lot of people would have been stopped out. The correct way to trade this would have been to look for sells in the opposite direction. As you can see, there was a break of structure with lots of displacement over here, and as you can see, price is still retracing to the premium. Okay, as you can see, retrace the premium over here and return to these lows. However, it has made sell side liquidity, so we could see that being taken out very soon. And also, price has left a gap right here. So we could see this area being filled in possibly before returning down. However, it doesn't have to drop from this area. We could see, wait for lower time frame reactions in this area to take our trade. So that's all for today's video. I want you guys to keep this in mind when you're looking at structure next time. And I want you guys to share this video with a beginner trader or a friend who's struggling with their market structure and keeps getting stopped out. Even if they're a smart money trader, ICT trader, whatever they are, if they keep getting stopped out and getting caught up on the wrong side of the market, I want you to send them this video and the daily bias video, as this will help them a lot. And a reminder, if you're trying to pass your funded challenge, our automated trading bot will pass the challenge for you, 100% guaranteed. It's the best service, it's the fastest passing service out there. And after we get you on the live funded stage, you can join our live signals room for free for 1 month to learn how to take trades on your live funded account. It's $30 right now. I've reduced it from $100 to $30 a month to make it as affordable as possible, because I want to help you guys out as much as possible. So remember, share this video with a friend, like, subscribe, and stay active on all my socials, because I'll be giving out a lot of trading gems on there, and keep up to date with all my content. So I'll see you in the next one. Peace.